Hi, I'm Christine Prouty from the Investing Channel, and welcome to IP Go, the show where we take a look at the IP world past, present, and future. We had another very interesting week in the new issues market, though maybe not always for the right reasons. You may recall that last week we highlighted what many thought would be a hot new issue in the shape of barbecue maker Weber. We gave the issue a bit of grilling, suggesting that investors would need to be convinced that they wouldn't get their fingers burnt by backing a company that's been in business since the early 1950s, and which may have gone ex-growth as a result. It turns out that our concerns were well-founded and appetite at this barbecue was distinctly lacking. Weber had to dramatically scale back both the issue size and offering price to get the deal away, and ended up selling just under 18 million shares for just $14 each, versus the 47 million shares at between $15 and $17 each that it had originally intended to offer. If we could spot the smoke signals from here, one wonders why the bankers from Goldman Sachs, Bank of America, and JP Morgan couldn't do the same. That would have saved their client the embarrassment of scaling back the issue in such a drastic way. There was some good news for Weber, however, in that the stock did enjoy a price bump on debut trading up to $17.25 on day one and testing up to $20.44 3 days later. Weber was not the only issue to stumble last week, however. South Korea's IPO market has been hotting up lately, and we've seen listings in New York and in Seoul for some of the country's leading startups. The latest of which was video game maker Krafton Incorporated, best known for its PlayerUnknown's Battlegrounds game, a multiplayer battle royale shoot-'em-up. Krafton, which is backed by Chinese tech giant Tencent, which holds a 13.6% stake in the business, had hoped to achieve a premium rating and priced its IPO at 498,000 won, or $430 per share. However, investors took the view that owners of the business were being greedy, and Krafton stock opened down by 9.90% and fell by as much as 20% below the IPO price in day one trading. Analysts highlighted the fact that the company derives some 87% of its earnings from Southeast Asia, with as much as 70% of its sales originating from Tencent. And with Chinese authorities recently cracking down on online gaming, investors felt there was just too much risk involved to pay up for the stock. The Krafton deal was South Korea's second largest IPO ever and valued the company at more than $19 billion. Staying in Asia, ByteDance, owner of the incredibly popular social video app TikTok, is still considering an IPO. But in the face of pressure from Chinese authorities, it's now looking at listing in Hong Kong rather than the USA. Though any deal is thought unlikely to happen before 2022 at the earliest. ByteDance had been valued at as much as $180 billion after a fundraising round late last year, and would likely have looked to achieve a far higher valuation on IPO. Though that now seems doubtful given the hard line that Beijing seems to be taking with country's tech giants and their owners. ByteDance's chairman and founder Zhang Yingming is said to be worth as much as $35.80 billion, the kind of fortune that the Chinese Communist Party is finding it increasingly hard to tolerate. Wall Street bankers are heading for the beaches of the Hamptons if they're not already there. And so the IPO calendar looks pretty thin this week, with 4 SPACs the only deals of any size or note. As we've noted in recent episodes, IPO performance has been patchy of late, and deals have to be in the right space, at the right price, and the right size to go well. If we look at the performance of the last 100 US listed IPOs through August 10th, we find that 59 issues are trading above their IPO price and 41 below that level, almost a 60-40 split. And that the average return from these 100 issues is 21.97%, compared to a gain in the Nasdaq Composite Index of 4.12%. However, we look at all IPOs priced in 2021, of which there have been 316. We find that 158 are trading above issue and 156 below. Total returns from this universe are running at 11.32%, compared to Nasdaq Composite's 15.30% change year to date. That suggests to us that, for the moment at least, IPO investing is a stock picker's market in which timing is everything. That's all we have time for today, but as usual, make sure you do your due diligence before making any investment decisions.